Hi, this is Chris with Invest LYH, and I just want to apologize that I haven't had many videos recently. We actually lost a pet recently, so I kind of have been taking it easy for a little bit. I did want to show a picture of my cat that we lost. That's Smucker's there. She will always be a part of our family, but unfortunately we lost her recently, and that's why I haven't been shooting any videos lately. But today we got a video for you, so let's go ahead and jump right into the property. I'm going to go ahead and share my screen. And just so you guys know, I do these property analysis for you for Lynchburg, but I do not invest in Lynchburg. I invest in Florida and in Texas. So let's just take a quick look here at this property. 1016 Ardmore Drive. It's a new listing. It just came on the market either today or yesterday. I think I flagged it either today or yesterday. It's 239.9 with an estimated mortgage of about 1368 with a 5.5% interest rate. As an investor, it's getting more and more difficult to get those sub-6 interest rates, but we're kind of trying to play it conservatively here. Just again, this is always the first step. You always confirm these numbers after you run them. So let's take a quick look here at some income, because this property has something that's interesting that's happening to it. So you can see here that 12 months ago, let me grab my little highlighter here. 12 months ago, this property, the median was $1,500. Now, if we were to look at 6 months ago, we can see the median has jumped up to 1725. This is at the 6-month period. If we look back just 3 months now, the median income, the median rent for this is going to be $1,950. So within a span of 9 months, we went from $1,500 to $1,950. That's an increase in rent by $450. Now, is that something that you can always expect? I don't necessarily know, but let's take a look at the numbers for this property here. So I'm going to grab a different color here, and we're just going to start writing out the numbers. We know we're going to assume the income is the 19. Let me make this just a little bit smaller here. We're going to assume that the income is $1,950, and we have the mortgage amount right here, $1,368. Our management fee is not $195. I'm just going to split the difference of the 195, which is 10%, and I'm going to have 97 and 98 for for maintenance and repairs. Maintenance and repairs. Or I'm sorry, it's maintenance and repairs and vacancy. That's right. And then we have the property management fee and the mortgage. Together, this number is going to be $1,758. So if we were to take the $1,950 and subtract the $1,758, what we're going to get is we're going to get $192 in monthly cash flows. And if we look at that on an annual basis or yearly cash flows, we're going to get $2,304 in annual cash flows. Now, we have the down payment amount right here. We're just going to pop that in the denominator, the $47,980. And what is this going to give us as a cash on cash return? It's roughly 4.8%. Now, this property is unique in that we know, based on the history, that the rental prices are growing. They're increased by $450 in 9 months. So let's say we were to just add an extra increase of about $150. Let's run the numbers with a $150 increase in rent. So now the $1,950 turns into $2,100. And we still have the same expenses. $1,368, $195, $97, and $98. Same amount of the $1,758. And what we're going to get is we're going to get $342 in monthly cash flows. And if we go into the annual number, that's going to be $4,104 in annual cash flows. That's pretty good. Now, since we're assuming we're going to be purchasing it at the same price, which is the 47, or which is the 239.9, the 47,980 is going to be our denominator, 47,980. And what we're going to get for this is an 8.55% cash on cash return. So this is a unique property because I'm going to go ahead and stop sharing the screen. And I'm just going to say this is a unique property in that we know that the rents are increasing in the area because that's what Rentometer is showing us. Again, I would recommend taking a look at this with a property manager and verifying that information. But can you extract another $150 out in rents every month, which will increase your cash on cash return? It'll almost double your cash on cash return. That is the critical question for this property. So I hope you guys liked what you saw here. Again, I do apologize for not being as active in the past few weeks as I have been, but we did lose a pet of 14 years. I loved that cat to death. Here's the picture of her again. She was a sweetheart cat. This was in one of her last days with us. But yeah, continue to like and share our videos, and look forward for some more as my morning period is not necessarily over, but I can kind of get on with things and continue to do this hobby that I love to do. Love just helping people figure out cash on cash return. And let me know if you have a specific property here in Lynchburg that you want to learn more about. Thanks so much. You guys have a great day.